Today, we're going to be talking about where you can find money. The low-hanging fruit, if you will, is employee retention credits. Let me give you an example of what an employee retention credit can potentially do for you. Should you and your company qualify, it is up to $19,000 per employee for both 2020 and 2021. Now, our government, in their infinite wisdom, is attempting to modify this and extend it. We don't know exactly what they're going to be up to. So the bottom line with that particular part of the message, take action now while we know what the rules are and we know what you can get. You can always come back and ask for more. The employee retention credits is the little brother of the PPP loan program, but the PPP loan program has been so popular, this has been overshadowed. You don't hear a lot about it. Now, one of the things that comes up quite frequently is, okay, I took my PPP loan. Does that mean I can't do this as well? No. Your PPP loan, and I'm going to repeat this information again, is that simply reduces your qualifying wages to help you get these employee tax credits. Now, remember, these credits that they're calling them are refundable, and I'm going to repeat that as well. Refundable tax credits means you can literally get money in the mail. It's part of the CARES Act. It was modified again December 28th and modified again in January. So please understand that this is an ever-changing area of tax law. Something we think you should know. This is Center Street with the IRS. I do literally mean that. I am going to pick up this page and read to you verbatim what the IRS website says, and you tell me if you think this is Center Street. The IRS has this, the first sentence of the first paragraph when talking about the employee retention credits, the ERCs. The Internal Revenue Service urges employers to take advantage of the newly extended employee retention credit. Think about that. When was the last time you heard of the IRS encouraging people to take any kind of a tax advantage? And in this particular situation, they literally use the word urges. So this is Center Street with the IRS. Again, it's real money in your pocket, and it can happen quickly. Okay. Now, of course, we have disclosures. Let me get to that. And by the way, this is a screenshot of the IRS website. And if you could read it on a giant screen like the one I'm looking at, if you're on a phone, you don't have a chance of it. But if you'd like a copy of this, signing up for either the Magnify Your Wealth or a free evaluation with our team to see if you can get some ERC, some employee retention credits, some money, right? We'd be glad to provide this for you. Remember, this information is provided for informational purposes only. We do not intend that this is any kind of advice. We are not accountants or attorneys. We do not represent you because we don't know anything about you. And quite frankly, this is a complicated area. We have a fully trained team of accountants and payroll specialists to help you get through qualifying for this process. But please don't hesitate to use us. We will make an offer for you to be able to reach out to us later on in the presentation. Let's talk about this for a second. What is an ERC? Who's it for? How do you qualify to get it? How does it work? And then we're going to cover frequently asked questions. Now, one of my favorite parts of these webinars is opening up for email. So in your chat box, if you have a question, do not hesitate. Please chat your question right in the chat box, and we'd be glad to go over that. And hopefully we'll be able to get your question answered. So who's it for? You have to be an employer. You have to have employees. There is no specific industry. There's no industry limitations. You can be Laughlin Associates. You can be a restaurant. You can be a manufacturer. You can be a wholesaler. Doesn't matter. If you have employees, you could potentially qualify for the ERC. Qualifications, we're going to go into that for a minute. The bottom line is there's two basic tests. Test number one, it's the easiest of the tests, and that is if you've lost money in any given quarter, more than 50% year over year from 2019 to 2020 and or 2021. We'll go into that in a little bit more detail. How does it work? Once we do all the mathematics to make sure that you qualify, we submit the paperwork to the IRS and they send you money. Works pretty well from that perspective. And I can't wait to get into the questions. As I said, it's one of my favorite parts of these webinars. Now, this is just a quick little template to sort of give you a brief overview of how the program operates. Many people are going to want a copy of this. Again, you're more than welcome to ask us for a copy of this. If you're a member of the Inner Circle, sign up for the Magnify Your Wealth or the free evaluation. We'd be glad to make this available to you. Let's go through some of the highlights of this. The rules for the 2020 year are different from the rules in the 2021 year. If you didn't already apply for the ERCs for 2020, they are still available to you. Yes, that's right. The 2020 ERCs, that money is still available to you until about April 15. Now, we're unclear whether the IRS will allow us to extend with our tax returns or not. So my best advice, act now so that you don't miss an opportunity of what 2020 might represent for you. In 2021, they've extended it for the first quarter and second quarter. If you qualify in 2021, it could be $7,000 of tax credits per employee per quarter, $10,000 in 2020. Combined, $5,000 for 2020. If we combine that, that's going to be $19,000 of potential benefit for each one of the employees you have. I just finished a client at 3 o'clock this afternoon, and with his list of employees, minus his PPP loan, he was able to qualify for almost $40,000. By the way, folks, a little tidbit of extra benefit. That $40,000 is not taxable. Yay. Now, the rules change if you have more than 100 employees for 2020 and more than 500 employees for 2021. So if you have 300 employees in 2020, the rules are completely different. Please reach out to us. We'd be glad to go through that particular process separately. If you have 300 employees for 2021, you're in the same boat as the rest of everybody else. The rules are the same. Okay. Now, qualified wage. There's a definition of what qualified wage is. Basically, it's the money that you paid your employee. If in 2021, you get to include health benefits on top of the wage. Now, they limit how much of the wage you get to use. In 2020, it's $10,000. In 2021, it is $10,000 per quarter. So we'll take a look at that in a little bit more detail. Again, just a quick reminder, when you sign up, you're more than welcome to get copies of this. Now comes the math. When I practiced in front of my wife, who also happens to be my business partner, she said, "This is really complicated. Don't go into so much detail. Just know this, there is a specific set of mathematics available for each tax year and each quarter." And you can see here in 2021, the tax credit is 70% of qualified wages. In 2020, it's 50%. And qualified wages is capped out at $10,000. So in 2020, your maximum credit is going to be $5,000 per employee. In 2021, it's $7,000 per quarter 14 grand for 2 quarters per employee. If they extend it without any further changes, we may find ourselves with the ability to capture yet even more tax credits. Now the test, you see that down there, a 50% decline in gross revenues, not net, gross revenues versus your 2019 tax year, and only a 20% decline quarter over quarter 2021 compared to 2019. If your company hasn't been around long enough to have a record of gross revenue in 2019, you can compare it to 2020. As you can tell, the math is going to get kind of simple, but here is a sample. Imagine in the first quarter, 2019, my gross revenue was 30,000. In 2020, my gross revenue was 28,000. That's only a 7% fall off. I wouldn't qualify. However, take a look at what happened in the second quarter. My revenue in 2019 was 40,000. As you can see, my revenue dropped by 55%. I would have a qualifying event. Now I can go back, do the math on my qualified wages to qualify for the tax credits. And you can see each quarter has its own math that goes along with it. So you could potentially qualify quarter over quarter, particularly in 2021. Let's take a look at that. In 2021, we have only a 20% fall off of income that's required. So let's take a look at that second quarter. That's $40,000 of gross revenue. Now in 2019, in 2021, I managed to get my gross revenue back up to 32,000. I still qualify to go get those tax credits. Now remember, quarter over quarter, you can qualify or not qualify. When you qualify, you get the credits. When you don't qualify, you don't get the credits, but that's quarter by quarter. So you could qualify for half the credits. You could qualify for a third, a fourth. Here's the point. If you qualify for even a fourth of it, it's worth going after. Let's take a look at quarter number 3 and quarter number 4. We don't know what they're going to do as far as the rules are concerned, as far as the third quarter and the fourth quarter is concerned. We don't know what the rules will be at that point. My purpose, apply now, get going. If we want to, we can get to come back and apply for additional benefits. You do not have to wait. This is not one and done and that's it forever, at least so far. Remember, tax law is changing. Oh, again, more math. Isn't this fun? And you see, me, I'm a spreadsheet guy. I love math, but it can be a little bit overwhelming. So now you're getting a sense of how in-depth the math can be. If I had an employee and I paid him $15,000, my qualified wage limit is $10,000. I now qualify to get the tax credits off that employee. If I only paid them $6,000, I only have $6,000 of qualifying wages. And if I paid them $6,000, then $8,000 in the third quarter and so on, I'm tapped out at $10,000 qualifying wages. Take a look at number 3, third quarter, that third employee. It's $3,000 of qualifying wages. I would only get a pro rata benefit off of that employee if I met other qualification purposes. Okay. As you can tell, this can get a little bit intense on the mathematics, depending on the number of employees you have. Let's keep it simple. Hire somebody who knows how to do the math and already has the spreadsheets built. 2021, you see, it's pretty much the same story. Quarter over quarter, you get to qualify or not qualify. All right. Now, let's keep going. One of the things that we hear all the time, well, I got the PPP loan. Doesn't that disqualify me from my ERCs, my employee retention credits? The answer is no. If you got the PPP loan, they simply subtract the benefit that you're going to get forgiven from the PPP loan. They're going to subtract that from your qualified wages. That's all that happens. Now, I don't know if your situation's any different than mine, but in my situation, the PPP loan didn't cover 100% of the wages. We used it as we were told we could. 30% for those support costs like rent, things of that nature, 70% towards wages. If that 70% didn't cover 100% of my wage, whatever the difference is, still helps me qualify for employee retention credits. If you qualified for the Family and Sick Leave Act, that money would be subtracted from your qualified wages as well. Bottom line is, and it's fair, you can't double dip on this stuff. Now, you can use it up to 100% of your wages. So if you used your PPP loan for 70% of wages, and then you've got 30% of your wages left, if that's enough for the qualifying event, you get to use the qualifying. You get to get those employee retention credits. Now, folks, I got to tell you, there's some additional news along with this employee retention credits. They're refundable, meaning you get a check and they're tax-free. You do not have to pay tax on this. Okay. Now, here's another thing. If you got an EIDL loan or an SBA loan that's not a PPP loan, it is not subtracted from your qualified wage. It does not impact this at all. Knock yourself out, have fun. You get both of them. No problem. Center Street with the IRS. Remember, they're urging us to take advantage of these rules. Now, what I've been given to understand is that per employee, there's about 40 different calculations that need to happen to determine the actual qualifications. As I suggested, our accountants and payroll professionals, have the spreadsheets already built out. All they have to do is load up the information you give us to see if you qualify. Once you know how much you qualify, then you can go ahead and you can either do it yourself, the complicated path, or keep it simple and have our team complete it for you. Think about that for a second. Doing it yourself means you got to go to the website, the IRS website, read the pages and pages and pages of rules, figure out the mathematics, right? And do it yourself. Okay. Or you can simply hire a team like ours and we can get it done for you. They will be looking for every opportunity to maximize your employee retention credits, those tax credits. By the way, let's talk about the kind of companies. Remember, I told you there was no limitation. If you're a city, cities don't qualify. If you are a support organization of a city, you may not qualify. But if you are a charity, you qualify. If you're a for-profit, you qualify. So it's pretty generous as far as the number or the types of businesses that this applies to. My bottom line with this slide is you can go down the complicated route and do it yourself. You can go down the simple route. We can help you out. That concludes the primary area of the presentation. What I want to do now is go through questions. Now, please, these questions are intended to stir the pot, to get you to think of questions. So put it into the chat box and let us respond to them. What is an employee retention credit? It is a credit for having kept your employees around. Literally, that's what it's about. Now, it's a refundable tax credit, which means refundable tax credit is IRS language for we'll send you a check. What does it cover? Qualified wages. For 2020, think it's the money that you actually spent or gave to your employee in the way of a payroll check. For 2021, it can include health benefits. Okay. Are self-employed individuals eligible? Unfortunately, no. If you have a full-time employee, yes. If it's just you, no. If you have any questions, again, this is why we do the evaluations. Can I apply for more than one assistance program? I certainly hope so. PPP loans, EIDL loans, the Family Care and Sick Leave Act, the ERCs, what we're talking about this evening. Absolutely, let's go for it. Remember, we can't double dip, but we can certainly go back for an additional bite of the apple. Okay. How much credit can I claim? Currently, it's up to $19,000 per employee that you've managed to retain during these difficult times. $19,000 per employee. Now, it's broken down, $5,000 of credit for 2020 and currently $14,000 of credit for 2021. Remember, they're actually changing the law. They're talking about extending it. We don't know. We think they may actually allow us to take an additional $7,000 of credit for each additional quarter until December of this year. We could potentially get $28,000 of credit just for 2021. And then, of course, $5,000 for 2020. That's up to $33,000, perhaps. $19,000 for sure right now. Okay, there it goes. Right? Okay. What are qualified wages? Well, I said earlier, qualified wages is pretty much the money that you pay to your employee. Now, in 2021, they're trying to be a little bit more generous on what that actually includes. They've included health insurance and some other costs, okay? Now, your employee has to be a full-time employee. Part-time employee does not qualify. Full-time employee. I guess the theory there is full-time employees are supporting themselves where part-time employees may not be. What quarters can I claim the credits? Well, a lot. Let's take a look at that. That would be for 2020, and that would be for the first 2 quarters of 2021, for sure. Now, they do it quarter by quarter, but they run some of the measurements by the annual in 2020. In 2021, it's a little more simple. Everything's done by the quarter. You can qualify in one quarter, get a credit, and then not qualify in the next quarter. You still get the credit from the quarter that you did qualify in. Just remember that. It's not a one and done. Okay. How and when do I apply for claim credits? Well, the when is now. The biggest problem that I foresee is the potential that the government runs out of money that they can allow these credits to be given. So it's like, folks, there's a rush, go for it, jump in line, get on it now. Take action now. And how? It's really simple. You can either do it yourself, the complicated road, or you go through the evaluation process that we're going to be offering you to go through tonight. And our tax experts and payroll experts would be glad to evaluate it for you, give you an idea. The gentleman that I spoke about earlier, who's getting $40,000 of these tax credits refunded to him in a check, it took us about 3 days to decipher it. He missed some bits and pieces of information that we needed. So to go through the process, the way we're going to do it is we're going to have an initial conversation, make sure that we're on track. Then we're going to send you a list of everything that's needed. It's literally going to be a checklist. You provide that in a secure Dropbox. Then what happens is our team will go through it, come up with an idea of what we think kind of credits you'll qualify for. So, and the gentleman that I dealt with today, our team came through there and they said, we think you're going to come up with $40,000 of credits. Now, his fee is $4,000. We always want to make sure that the fee is going to be commensurate with the benefit. Remember, this is so that you come away as a winner. Now, there you go. You're more than welcome to reach out, ask questions as you need to get answers that you need to move forward.